Hello there, and welcome back to Financial Accounting Info. In this video, we want to look at a question from cash flow statement. It's a question from November 28 question paper, and it's on question 4. The question reads, start with the required parts whereby 4.1 reads and draw up the cash flow statement of Fusion Express for the year ended 31 August 2017. And 4.2 is saying show the following modes of calculations, that is cash received from customers or clients, and then cash paid to suppliers and employees. So this is what we have in terms of the third part. So what we are going to do is we are going to first draw up the cash received from customers and calculate it, and then also calculate the cash paid to suppliers and employees. So this comes as calculations or pre-calculations that are supposed to be done before you prepare the cash flow statement. Remember, under the cash flow for operating activities, we are going to put our cash received from customers, and also we are going to put our cash paid to suppliers and employees. So it means we have to prepare this two before we go to the cash flow statement, as we are going to put their figures in the cash flow statement. So the question continues and say on the information part, you are provided with an extract of income statement and balance sheet, and then on the notes to the balance sheet were not appropriately drawn by the bookkeeper. So this is what we are going to this page. So you go to the next page, you see that we're given an income statement of Fusion Express for the year ended, uh, uh, for the year ended at the 31 August 2017. Then we are also given this income statement starting from sales down to the net profit for the year. And then beneath that, we are also given balance sheet of Fusion Express as of 31 August 2017. And if you go down, you'd see that this is what we have according to this page. So if you go to the next page, you see that we are also given notes to the balance sheet whereby we are given the property, plant and equipment note, and then other financial asset note. Then we also given additional information that we have there. And then check note that our question has got 55 marks. So this is what we have. So we are going to first of all go through the calculation of cash received from customers. So this is the note that we are going to start with, and the figure that we are going to start with there is we are going to start by mentioning the cash received from clients as we are going to calculate it. So we are saying cash received from clients or customers, and then this figure is going to come in line with this in this column, and then beneath that, now that's where we're going to make the calculation whereby we are going to say a negative sales, and then um we are going to start with negative sales and try to see what we get there, depending on whether we want to start with a negative or we want to start with a positive figure there. So here we are going to start with the figure for sales. So we are going to say sales, and we are going to subtract uh, the movement that we have for data, whether it's an increase or a decrease. If we have got an increase, we are going to subtract it from the sales figure to get the cash received from clients, from customers. And then if it's a decrease in data, that's when we are going to add here. So let's just check the figure that we have for sales first. So if you go to the question, we are going to the income statement and check the figure that we are given as our sales. So if you go up, try to check what figure we have. So you see that the figure for sales that we have is 630,375. So this is the figure that we are going to start with. So we go back. So we are saying the figure that we are having is 630,375. And obviously now we are going to now adjust for an increase or a decrease in data, which we are going to analyze from the question according to the figures that we are given. So we come back again at the beginning of the question, we go to the balance sheet. You see that we are given the balance sheet for 2016 and 2017. Then we go to data, trade and other data. We see that In 2016, we had 200,550, and it increased to 270,500, which is an increase. So basically, we are going to say 217,500, and then we subtract 200,550. So if we subtract here, you see that the answer that we are supposed to get there is 16,950. So this is what we have. So this is an increase. So we said if it's an increase, we are supposed to subtract. But if it was a decrease, we are going to add. So in this case, we are going to subtract 16,950 from the figure for sales. So we are saying increase in debtors, and the figure that we got is 16,950, and then we subtract. Then the answer that we are supposed to get there is now the cash received from customers, whereby we are having, if we say 630,375 minus 16,950, you are going to get 613,425. So this is the figure that we have according to the calculation of cash received from customers. Then we can continue and try to go to the other note that is on the calculation of cash paid to suppliers and employees. This is our second note. So remember, in this note, we are going to start with the sales figure. We are going to start with the sales figure, and the sales figure will always start as a negative. We are going to start with it as a negative, and then we are going to add our profit for the year. We are going to add our profit for the year. So if you add our profit for the year, you are going to get your expenses balance. So this is what we have. So what we are trying to say is here we are going to have profits for the year, and this figure for sales will start as a negative, and then you get the figure for the year, and then the answer that you are supposed to get, you get the figure for expenses. So basically, this is what we have. So we can just go and check the figure for sales and profit for the year. So if we come back, obviously those figures, we're going to find them in the income statement. So if you go up to check our income statement, you'd see that the figure for sales that we have is 630,375. And then the figure for profit for the year, we've got 322,478. So our sales figure will start as a negative. So we go back there, and we are seeing our sales figure, it's 630,375, which is going to start as a negative. So we put it in brackets. Then our profit for the year, remember the figure that we got there is 322,478. So if you say negative 630,375 plus 322,478, you are going to get a negative 307,897. So this one again becomes a negative figure. So this is what we have according to the calculation of expenses. Then beneath that now, we are going to check in terms of income and expenses. So we are going to adjust for interest received. So in terms of any income, we are going to show it as a negative beneath this, and all non-cash expenses, we are going to show them as positives. Any non-expense, non-cash expenses, we are going to show them as positives beneath this, and then any income that we are going to see there in terms of discount received, we are going to show them as negative. So discount received and loss on disposal also, we are going to show them as 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 uh, as positives. Loss on disposal, we show it as a positive, but profit on disposal, we show it as a negative because it's an income. So basically, what you are saying is our expenses, we show them as positives, and then uh, our income will show them as negatives. So this is what we have. We are also supposed to adjust for changes in working capital. So I remember on working capital, calculating working capital, we say working capital is equals to current assets minus current liabilities. So basically, we are going to check if the elements of current assets, their movements in terms of an increase or a decrease are between the two financial periods. And then we check again elements of current liabilities to check the movement in terms of increase and decrease. And then we also adjust under this calculation of cash paid to suppliers and employees. So we go there and start to check the figures that we have for interest received or interest paid. So if you come back here, we go to the income statements and we see that we have got interest income that we have, which is 11,700, which is here. So this is one of the incomes that we are supposed to show as a negative. So go back there to put it as a interest income. We are going to put it as a negative since it's an income. So I will go there. We are now saying our interest income. We've got 11,700. So it as a negative. And our interest paid is going to come beneath this. Our interest paid now, we show it as a positive because it's an expense. So basically what we are saying interest paid. Interest paid. So we're going to check the figure that we have for interest paid. So if you come in our income statement, you see that we have got interest for the bank overdrafts, which is 697 here. And also we've got interest on loan, which is 6,900. So we have got two interests, so we are supposed to add 697 plus 16,950. So we come here. So in brackets, we are saying 697, and then we add 16,950. And then the total will be the interest paid, which is let's try to see 17,647. And this is an expense, so we are supposed to show it as a positive. So this is what we have. We also check for depreciation. Remember, depreciation is a non-cash item. That's why we are adjusting it. And then for the case of interest income and interest paid, we are adjusting them as a procedural step. Since we are also going to adjust, we are going to readjust it again in the statement of cash flow, the cash flow statement. So we just remove it here when we are calculating cash paid to suppliers and employees. And then when you go to the cash flow statement, we readjust them again. So this is what we have. So on depreciation, we are removing it because it's a non-cash item. Remember, we are preparing a cash flow statement whereby we are only concerned with actual cash movements in and out of the business. So on depreciation, we go back there to see what figure of depreciation we have. You see that we have got depreciation on equipment here, which is 16,875. And then we have got depreciation on vehicles, which is 24,600. So we are going to add the two to get the total depreciation. So we come here. So basically in brackets, we are now saying 16,875 plus our 24,600. And then the total that we are supposed to get is 41,475. 41,475. And then obviously we are now checking changes in working capital. Remember, working capital is said it involves current assets and current liabilities. So elements of those ones, check their movements, go to the balance sheet, So if you go down to the balance sheet, so we go to the current assets section, we see that we have got a stock that we have there. This is 2016, 2017. So stock is moving from 285,000 to 350,000. So we see that this is a decrease. Let's see. We see that this is an increase from 285,000 to 350,000. So we have gotten an increase there. So we can just calculate the increase that we have there. So when we are having an increase of the current assets, so basically what we are saying is when it's an increase of the current assets, you are supposed to subtract. You subtract, and then when it's a decrease of current assets, we do the opposite again. So the same applies to current liabilities. When we are having current liabilities increasing, we do the opposite with what we do to current assets, which we are supposed to add. When it's a decrease of current liabilities, we subtract. So it's just the opposite of what we are doing on current assets. So we come under current assets, and you are saying 315,000 minus 285 for stock. You are supposed to get your 30,000. So let's try to calculate that one. We just verify that answer. That is at 315,000, and then we subtract 285. Get to 30,000. So you have got 30,000, which is an increase which you are going to subtract. So we go there. You're now saying increase. Increase in stock, whereby we are saying 315,000 minus 285. And the answer that we got there is 30,000. Right. So this is what we have in terms of stock. So we can check again other elements that we have under current assets. So if you check there, we've got traded other debtors. Remember, we have already adjusted for debtors under cash received from customers, so we are not going to adjust it again. And then we've got cash and cash equivalents, which is the movement of the cash flow statement balances, which we don't include in the calculation then. So we are only going to take our stock, and then if you go to our current liabilities now, remember we said it's going to involve current assets, movement of current assets, elements of current assets, and then elements of current liabilities. So if you come to current liabilities, we are here. We have got trade and other creditors only. Bank overdraft is part of cash and cash equivalents, so we are not going to include it. So trade and other creditors, we've got a movement of 157,673, 284,273. So this is an increase in creditors. And remember, if it's a current liability and it's increasing, we said we add. So we are going to just say here 284,273. Then we subtract 157,673. And when you do that, you're going to get 125,100. So this is the increase that we are supposed to add. So we go there and say increase in creditors. So we are saying increase in creditors. Then in brackets, we are saying let's try to see the calculation that we have. Go back to check the figures. 284,273 minus 157,673, and then we got 125,100. So the answer that we have is 125,100. So we are going to say 125,100. So you can just put your calculation in brackets, and we said we are adding. So we this is the addition part that we have. So so this is what we have in terms of increase in creditors, and then we can check if you've got any other items that needs to be adjusted. We can go back to the income statements and go over it again. You see that we've got depreciation as the last item that we're having, but also we have got another non-cash items that we have skipped there, which is our loss on sale of equipment. This is a loss on disposal. So remember, if it's a loss on disposal, it's an expense, so we are supposed to show it as a positive. But if it was a profit on disposal, we are supposed to show it as a negative. So we are picking this loss and put it as a positive. So we go there. So if you come here now, we are now saying our loss, on disposal. The amount that we have is 1,050. And then we show it as a positive. So having done this, the answer that we are going to get is now cash paid to suppliers and employees. So here we are now saying cash paid to suppliers and employees. And this figure is going to come in this column. So basically what we are saying, we are going to start from sales, figure for sales. We are going to say 630,375 negative 630,375 plus 322,475, and we got negative 307,897. So we start from here. We are now saying negative 307,897 minus 11,700 plus 17,647 plus 41,475 plus 30,000. So this 30,000 we said it's an increase in stock, so we are supposed to show it in what? In brackets, because this is an increase in current assets, so we show it as a negative. So this is what we have. So it means we are supposed to say negative 307,897 minus 11,700 plus 17,747 plus 41,475 minus 30,000 plus 125,100 plus 1,050. And the answer that we are supposed to get here is 164,325. So this is going to be your figure for cash paid to suppliers and employees. So this is what we have in terms of the two notes. Then after that, now that's when we are going to go and prepare the cash flow statement. So we have got a cash flow statement that is beneath that. So in the cash flow statement now, remember, we are going to start with cash flow from operating activities. So here we are saying the ending that we are going to have there is now cash flow of operating. And then the figure for cash flow from operating activity is going to come in line with this description here. So beneath that, that's where we're going to calculate that figure. So we're going to start with cash received from clients or customers. That is note that we first note that we prepared. So we are saying cash received from customers. So we can go and check the figure that we got. Cash received from customers. So remember, the figure that we got for cash received from customers is 613,125 as a positive. So this is the figure that we are going to start with. And then again, we are going to pick again the cash paid to suppliers and employees. And remember, we got it as 164,325. So we come here, enter those figures. We start with cash received from customers. We are saying 630. We are saying 630,425. And then beneath that, we are supposed to also adjust for cash paid to suppliers. And we are seeing it as 164,325, but when we put it here in the cash flow statement, we are supposed to show it as a negative because it's an outflow of cash. So we are saying 164,325, then we show it in brackets so that we are subtracting. Then when we say cash received from customers minus this figure, 164,325, we are going to get 449, 449,100. And this figure that we are getting here is now cash generated from operations. So this one is cash generated from operations. So this is what we have at this stage. So after that, you are supposed to adjust for interest income and interest paid. Remember, we said interest income and interest paid. We first adjust them in the notes there, and then we readjust them again in the cash flow statement. So we are coming here and we are saying, we are coming here now. We are saying interest income, but we already know these figures. Can maybe just try to recheck in terms of those figures in this in the question. Interest income, remember, we are getting it there. Interest income, we got it as 11,700. So we can just pick that one. 11,700. And then we are going to show it as a positive because it's an inflow of cash. Remember, in the cash flow statement, we show actual movements of cash in and out of the business. So when cash is moving in the business, we show it as a positive. When it's moving out, it's a negative. So in the case of interest income, we are receiving, so we show it as a positive. Then also we are supposed to adjust for interest paid. And remember, we also adjusted this figure here when we are calculating cash paid to suppliers. We adjust it here, and then we got 17,647. So this is the figure that we are also supposed to readjust in the cash flow statement. So we come here. We are saying cash paid. Sorry, interest paid. We are going to get 17,648, and this is an outflow we are paying, so we show it as a negative. So we show it as a negative, and then also we are supposed to check for drawings. So our drawings, you can only get it in the additional information. So it means that we're going to check in our additional information which amount of drawings to be have. Right. If you come here, you would see that we are told that trade is open cash taken by the owner for his personal use for the 2016 financial year amounted to 17,100. So remember, this is referring to 26 financial period, and the cash flow statement that we are preparing is for the 2017 period. So we are going to ignore this one. But then in 2017, they're saying trading stock and cash taken by the owner for his personal use for the 2017 financial year amounted to 37,500. So we are going to check the one for the current year, which is 2017 for 37,500. So this is the figure that we have for drawings. So we go back there. We are seeing that drawings, obviously, it's an outflow again. So we saw it as a negative. So this is what we have in terms of adjustments, other cash flow from operating activities. So we can now calculate so that we can find the cash flow from operating activities. So we are saying cash generated from operations 449,100. You add 11,700. You subtract 17,648. You subtract 37,500. We are supposed to get 405,652. So this is the figure that we are going to put there, which is 405,652. So this is a positive, so we show it as a positive. So we go there, we go to the next category, which is the now cash flow from investing activities. So we are now saying cash flow from investing investing activities, and we are going to show in terms of the movements of the non-current assets, any addition of the non-current assets, any disposal. So on disposal, we are going to check the actual cash that has been received for that disposal, and then we record it. If it's on credit, which means you are not going to record anything because there's no cash movement. So if you come here on the additional information, you try to see, you'd see that we are told that equipment was sold during the financial year. The accumulated depreciation until the date of sale was 19,200 and cost price was 24,000. So we are not told how much was it sold for. So we have to calculate. So remember, when you open a disposal account, we are supposed to put the cost for the non-current asset that has been disposed on the debit side, and then the accumulated depreciation comes on the credit side, and then the cash paid will come on the credit side. So this is what we have, and then you compare to see which one is greater, so that you can determine whether it's a profit or loss. If we have got a smaller figure on the debit side, it means it's going to be a profit. But if it's a smaller side on the credit, we are going to give a loss. So this is what we have. So we now prepare this disposal according to the description that we have given there. So the cost, we are told that the cost is 24,000, which is supposed to come on the debit side. And then accumulated depreciation are given is 19,200, which is supposed to come on the credit side. And then we check for the loss or profit on disposal in the income statement. So we go up there, you see that we are told something about loss or profit or disposal. Go back in the income statement. So you'd see that we are told that there's a loss on sale of equipment, which is 1,050. So 1,050 is a loss. So we come back. So remember, loss we are saying is on the credit side. So we are saying 1,050 on the credit side. So the figure that we are looking for is also on the credit side. This one cash should be on the credit side. So it means we are looking for a figure that should be here. So in other words, we are just saying 24,000 minus 19,200 minus 1,050 so that we get this figure. So let's try to calculate that one. We are now saying 24,000 minus 19,200. And then we subtract again 1,050. And then the answer that we are supposed to get there is 3. Let's try to calculate 3,750 is the answer that we are supposed to get, which is supposed to be here. We are saying 3,750. So this is proceeds from disposal, proceeds on equipment. So we are just going to summarize as such in the cash flow statement. So we are saying proceeds from equipment. And we are saying the figure that we have is 3,750. Then we check in terms of vehicles. What are they saying? We are just told that we are just told about equipment, which means vehicles, they are silent. It means if you go and analyze what is in the notes of for vehicles, that's when you can only be able to see if there's an increase or a decrease of vehicles. So for vehicles, you'd see that we are given note for 2016 and then note for 2017. So we can check on the movement of cost, which is the gross carrying amount. Here for vehicles, it was 832,500. And then here it was 952,500 in 2017. So it's an increase. So it means something was purchased. So we need to adjust for a purchase of vehicles in the capital segment. So basically, we are saying 952,500, and then you subtract your 832,500. So when you calculate it, you're going to get 120,000. We are going to get our 120,000. And this is a purchase, which means cash is moving out of the business. So it's a, I'll show it as a negative. So you come here, we say addition to vehicles. Addition vehicles. So addition to vehicles, the amount that we have there is 120,000. So it's 120,000 brackets was this an outflow. And then we check again. We check again in terms of equipment. Let's try to see on additional information if you have got anything that is explaining about any addition of equipment. So if you come here on the additional information, you'll see that we've got nothing that is explaining about addition of equipment, but we can verify if there was an addition of equipment by preparing a T account, whereby we are saying this is our equipment account. And remember, the open balance of gross carrying value will come on the debit side. So you can say the balance that we have for 2016 for equipment, uh, we have got 315,375. So we are going to put it on the debit, 375. And then anything that was disposed at cost price of that disposal, put it on the credit side. So you'd see that we've got an equipment that was disposed with the cost price of 24,000. So it means we are going to have 24,000 on the credit side. And then the the closing cost price, which is the closing gross carrying amount, is supposed to come on the credit side, which is 312,375. So we've got 312,375. So if you add the credit and debit, if they are not the same, it means there's something that was purchased. So basically, if you try to balance there, we see that the credit side is going to be greater. So we are going to say 24,000, and then we add your 312,000, 375, and then the answer that we are going to get is 336,375. 336,375. So it means this is going to come both sides. Then we say 336,375 minus the one that we have there, which is 315,375. We subtract, you get the difference there. Let's try to see what we get. We subtract 350,375. You are going to get 21,000. So it means there was an addition of 21,000. So this is the figure that we are going to put there in the cash settlement as an addition of equipment. So we come here. So we are saying addition equipment whereby we have 21,000. So this is what we have. And then obviously we are still on the investing activities. So we can check on the issue of fixed deposit. If the movement of fixed deposit again, we can only see it in the balance sheet. So come here, try to check in the balance sheet what we have in terms of fixed deposit. So if you come here, you see that for fixed deposit is this other financial assets is under financial assets. So this is our fixed deposit. So it's a movement from 45,000 to 30,000, which means it was reduced. Remember, if there's a reduction in fixed deposit, it's a positive. So we are saying 45,000 minus 30,000. And then obviously we are going to get your 15,000. So this is a plus 15,000 in the cash flow statement. So you come here, you're saying proceeds from fixed deposit. Proceeds from fixed deposits, which is your 15,000 is a positive. So this is what we have. So now we can calculate cash flow from investing activities, whereby you're saying 3,750, and then we subtract 120,000, and then we add 21,000. On 21,000, remember it's an addition of equipment, so it's a negative. There's a mistake there. You're supposed to show it as negative since it's an addition. So we're saying 3,750 minus 120,000 minus 21,000 plus 15,000. Then the answer that we are going to get here is a negative 122,250 as a in brackets. So that is a negative, which is our cash flow from investing activities. So beneath that now, we now go to cash flow from financing activities. So here we are saying cash flow from, financing, cash flow from financing activities. So for the cash flow from financing activities, we are going to show the calculation beneath that again, whereby we are going to go and check if there's any capital contribution that took place, and then movements of loans, and then we can see if there is a negative balance there that we are going to represent as our cash flow from financing activities. So if you go back to the question, you see that the owner contributed additional capital of 23,873 rands during the financial year. So if you check there, this is going to be your capital contribution that we're going to put there as a positive. Remember, this money that has been injected in the business, so it's an inflow. So we are saying capital contribution and the amount that we have is 23,873. And then we check again in terms of movement of loans. So we're going to be balance it and try to see what we have. Right, on movements of loans, we are going to find it on liabilities section. So if you come here, see that we've got a mortgage bond that we have there. That is having a movement of 637,500 to 487,500. So this is a reduction in loan. So whenever loan reduces, it means it's being repaid. So it's an outflow. So we are going to represent the difference as an outflow. So we are going to say 487,000, and then we subtract it 487,500. Then we subtract 637,500. And then if you calculate correctly there, you're going to get 150,000. So this is an outflow. So we go there and we represent it as our repayment of loan, or we can just say decrease in loan, which is our 150,000 as an outflow, or it is as a negative. So we go back to check in the question if you have got anything again to do with your financing activities. So if you go and check everything, you see that we've exhausted all the financing activities that we have in the question. So we can go there to find the net cash flow from financing activities. Right. So if you go there, if you say 26,873 minus 150,000, you're going to get a negative 630. Let's try to see 126, 126,127. So this is a negative. So this is what we have. And then we now want to calculate the net change. The net change, we are going to put it here. We are now saying net changes in cash. Net changes, cash, and cash equivalents. So basically, we are starting from the top in terms of the net change that we have for operating. We adjust it to add it to or subtract it to the one that we have for investing, and then we adjust for financing finance. So we are saying the figure that we have for operating activities, we have got a positive. We've got a positive 405,752. Then we subtract the negative 122,250 for investing. Then for financing, we go and check again what do we have. For financing, it's a negative again. We subtract 126,127. And then you get your net change in cash and cash equivalents. So the figure that you are supposed to get there is 157,275 as a positive. So we leave it like that as a positive. Then you are now supposed to add cash and cash equivalents at the beginning of the year. So here we are saying cash and cash equivalents at the beginning. So cash and cash equivalents at the beginning of the year, we check it in the balance sheet which we are given in the question. So if you come here, we've got cash and cash equivalents at the beginning is 2016, which is this column. We have got nothing in terms of current asset. So when it's under current assets, we should show it as a positive. When it's under current liabilities, we show it as a negative. So you'd see that we've got bank overdraft. It's also cash and cash equivalents. So, but when we have bank overdraft, we are supposed to show it as a negative since it's under current liabilities. So we are going to show it as a negative 119,775. So if we have got both there, cash and cash equivalents under current assets, and then we could also bank overdraft, we are supposed to say a positive that we have under current asset, then we subtract this for bank overdraft. The net figure now is to represent cash and cash equivalents at the beginning. But in this case, we're just picking this 119,775. So go there. We are saying it's a negative, so we are saying here 119,775 is a negative. So we are just here. We are supposed now to get cash and cash equivalence at the end. So here, final figure is cash and cash equivalence at the end, whereby we are saying 157,275 minus 119,775, and you get your net figure there, which is supposed to be 37,500. So this final figure, to show that we've done it correctly, you go and check the cash and cash equivalent at the end in the balance sheet. It should be the same with this one. So we come here. You see that at the end we have got cash and equivalence, which is 37,500, which means we've done that the correct way. Remember, on bank of we've got 0, so it means our cash and equivalent at the end is only 37,500. If we had the bank overdraft here, we are supposed to say the figure that we have here minus this one. The net that we get should be the same as what we got as the final figure in the cash flow statement. That is the cash and cash equivalent at the end. So this is what we have, guys, in terms of this video. Those who haven't subscribed, please subscribe and share. We are still coming with more videos. Yes, for this video, I'm signing out with you again.